All right, guys. Welcome to another episode of Swing Trades. I have not made a video in a while, and mainly it's because the markets just have not been working out for this particular strategy, which is kind of what I'm trying to stick with on this video here. So, um, last week there was a pretty big shift in the markets. I'm sure a lot of people noticed that their 401ks and long-term holdings and things probably were very nice last week for them, and that's because we had some de-escalation on the China tariff situation, and then not to mention the pharmaceutical bill that Trump was all over on Sunday and Monday. That definitely helps things out too. So with that said, um, what that meant for this strategy is that I had a lot of triggers. Now I had a few daily triggers during the week, but these ones here are all going to be weekly triggers. So we're on the weekly time frame. So each one of these bars counts for 1 week. And I'm still using the 5 EMA and the 10 EMA as my crossover. But then also there's this second arrow here. Also at the same time, we're looking for this MACD to cross over as well. So what this is going to signify is that these names have been triggered and they are showing a trend reversal as they are closing over the 50 EMA. And so we're looking at a trend reversal with the EMAs crossing uh, and the security being over the 50 EMA. And then also with a little bit of momentum as this MACD is crossing over, looking to potentially jump to the upside here. So uh, there's a big list. You can see this here. These are actually just the ones that I decided to um, pull out because they either work well with this strategy or there's not enough data, but they look good. There's a good chart, and so I'm willing to take them. And so as you can see here, there's a huge list. We're not going to go over every single one in detail. I'm just going to kind of show you how these charts look because they really do all look very, very similar. And there's a reason for that, right? So we're just going to kind of dive in here. Let's start with ARM. Uh, I do like ARM. I think I like ARM the most. Now, when I say I like ARM the most, you look here on the strategy, it actually hasn't triggered. You can see the entire life of ARM here. And this strategy has not triggered yet. So I do not know how this security is going to act with this strategy. But what I do know is that this chart has bounced off of a nice support here. I do have drawings turned off here. Off of a nice support here. Let me try to draw that for you here. And you can see that perfectly. And this was, the beginning week of April. Now, with this strategy, I'm not looking for the bottoms. I'm not looking for the tops. I'm trying to just get some of the meat of the trade. Um, I just want to ride on that momentum. So I'm willing to wait for the train to start and to show what direction it wants to head in before I hop on that train, just for one or two stops or whatever it might be. I'd rather do that than jump on this train thinking it's going to go this direction, and then it ends up saying, no, you know what, we're going to go right back around. We just hit the end of the line, and we're going to go right back the other direction. So that's why this strategy does trigger later, and I'm okay with it. Now with these trades here too, you can play them multiple different ways. This strategy is designed to play commons. However, obviously, you can grab options for all of these. These are all optionable securities here, and the top ones here are fairly well liquid as well. So good trades, and you can just simply keep these on watch and wait for your particular setup on like a day trade and just take them as a day trade or a scalp, or you can just take them as overnight swings, or since it is on the weekly time frame, uh, these are telling me that more than likely, we're looking at, through June, maybe even into July, these a lot of these tickers are going to want to be higher than they are right now. That could be just barely higher, or it could be breaking all-time highs at that point. So that's what this strategy is telling me. And I will show you briefly the contracts that I'm looking at. I'll kind of go through these first. I'll show you the contracts that I'm looking at, and I'm willing to take these contracts as kind of just a very small size, just a single contract probably on each one, and let them ride. These are going to be June and July mostly, I think, expiries, and I'm going to be willing to let them work through at least the first week of June, and see if we get some continuation here, because with the VIX as low as it is as well, the VIX is sitting at under 20. This is starting to now become a swinger's paradise. All right, so that is where I have uh, uh, shown my colors, and that's where I like to be in a swingers market, and so that's what this is. But like I said, these are good names to keep on watch. I mean, look at this: SPY and QQQ. Let's turn off the drawings. So we got SPY, QQQ. Look how similar all of these look. Even ARM, or I'm sorry, even ARM here, right? So they're coming down. They found a bottom. They're curling up, and you can see this trend switch, this momentum gain. We look in MU. It's the same thing. It's definitely a different chart, but we've got the same structure building here. And SPY, QQQ, these are amazing, right? We are just a small percentage away from all-time highs on these. And yeah, if you bought SPY down here, congrats. If you're in it, great, good job. Yes, we are buying after this rally, but uh, I'm definitely expecting a break of all-time high. So whether it maintains that or not, that's a whole different story. But I'm absolutely expecting a break of all-time highs on both SPY and QQQ within the next couple of weeks, few weeks, maybe even up to 8 weeks. So with that said, I will notice, I will note that we are ramped up, and we did push quite a bit here. We closed at the highs, and so would not surprise me at all to see a bit of downside next week, probably into Monday, or even Tuesday as well. As you just look at these weekly candles, right? Even this past week, what did we do? We had some downside. That's what this wick is. We had some pullback before we went higher, and I fully expect that on this one. So these aren't, these could still be a scalp, but just keep in mind. I mean, that's why I'm buying time, and I'm willing to let it work out with these. Let's look at coin here. So coin, oh, amazing week in coin. And sometimes, like with this one here, I can see what is forming as a reverse head and shoulder right here. This is beautiful. This is a beautiful, beautiful chart. Congratulations if anybody caught this breakout here. It broke out over the 200-day, and it was just a monster. But this weekly trigger, has just now gone off. And coin, again, this one is the first time that this is ever triggered. Okay. It's the first time where these EMAs have crossed. And so you can see that they've probably crossed up here or in this range, but it's the first time they've crossed along with the MACD crossing, showing signs of some momentum shifting. These are great signals. NVIDIA, this one has triggered once on the weekly. Um, On the daily, NVIDIA has triggered 54 times, and we're looking at 152 profit factor, 44% win rates. Um, not a bad performer at all. A very good performer. You can see here when it has triggered, it shows the trades, um, and I do have them set for 8 bars minimum. But look at this. I mean, don't worry so much about like the profit factor um, and things like that. But right here, like if you're swinging this and the trigger hit, so the trigger is telling me to go long right here, and look at that right there. The strategy bought. What happened? Well, immediately this thing probably pulled down, uh, and and it was underwater. This trade was underwater, but it came back up and at least tried to close towards the highs there, but still a green day, but a red candle. And then look at this: 3 days in a row of a beautiful trade. And if you're in options, that is a golden trade right there. That is a quick 3 day swing. Could easily probably rack up 100 to 200% on option contracts if you're playing weeklies. If you're playing longer dated, of course, probably just a more safe haven, but definitely some great gains right there. And then we have an inside bar. Then we have an inside bar, right? This bar right here, this day, I would have gotten out if I hadn't been out already. And, I'll tell you right now that I would have been trimming at least probably on all 3 of these candles, to be honest. Take a contract out here and there, and would have had just runners right here. This candle, I would have gotten out. Absolutely. Uh, this trade here, I have it set to exit after a max of 8 bars. So that's why I just got out here, long max bars. But I would have been out here. I wouldn't have waited. Um, that is a bearish engulfing candle. After 2 inside days, I'm done. So just quickly showing you some of the performance here, like this one here. Same thing. We get in here. We have a red day the next day. That's okay. Um, it's not anywhere near danger zone. Uh, the day after that, higher, higher, higher with a red candle. This looks like a spinning top to me. I probably would have gotten out here, right? Probably would have gotten out. And then here's where it doesn't work, right? And you can see here, it didn't work here. Let's reduce this. But also, look at this trigger. Look at the MACD on this particular trigger. Yeah, it did trigger, and it would have been on my scanner. I don't think I would have taken this though. I mean, look at it. It just looks like it's flat. It's really not building momentum. It's not coming from anywhere. It's just coming from the zero line, and just kind of looks like they're crossing on accident. And so I don't know that I would have even taken this trade, especially looking at the chart and where we were, etc. But this one I would have taken for sure, right? So we've got the MACD. Now we're underneath. Now it crosses over. Now it looks like we got some momentum, uh, and I would have definitely taken this trade here. And I think I might have even taken that one in February. Yeah, I probably did. So anyway, I just wanted to show when what this strategy does, what it is, and maybe some ideas on how to play it. You don't have to swing these things. That's my personal style. That's why I built this strategy. That's what I like to do. But you can definitely take these, and if you got any weeklies on this one, you could swing it to this day, or even on this day, right? You buy it and it ramps up. I mean, you probably could have got 30-40% on this day alone and just gotten out. Just a quick inside trade. Realized, okay, it's not breaking the highs, and I'm just going to get out because I like to be cash every day. Great. If it fit within your setup, good. So I think I digressed quite a bit there. Let's look back at the weekly and look at NVIDIA. I mean, I gotta say, like this is clean. This is clean. We are what you can see here. Usually with this strategy, we have a descending triangle or a descending. I'm sorry, a descending wedge or a descending channel, and this strategy grabs them when they start breaking out. Let me try to show you a good one that I haven't marked up yet. Um, ARM is probably a decent one. So I think I actually did. So you can see here, this was the downtrend that it was in, that it had to break. That was created back up here. When was this? Let me look. Back in January, and then it was tested again in February. And so this was the trend that it needed to break. Well, it did. It pierced that. It came back down to kind of retested this area. And at the same time, it had been starting to form this uptrend. Well, last week, it it said, okay, yeah, we are confirming this. This is a confirmation. This is a breakout, a retest, confirmation. That's what that is, right? It's that simple. So this here was definitely a kind of a descending triangle. Ended up turning into a wedge. I know it looks weird because I do have just the rays on, but here with ARM, for example, I'm getting in this next week. I don't know when. I'm going to look to see if we're going to get a wick down, get some cheaper contracts here, and especially if we test this trend line, I'm in, and then I'm staying in until it breaks this trend line. This is what it's riding right now. We are riding this trend line. It could last only a week. It could last 2 days. It could last 8 weeks. I have no idea, but I'm getting in. There is weekly supply up here, so I will definitely be trimming contracts at this point, and I'll keep runners, right? Unless I just have one contract. If I just have one contract, I will probably roll up and or maybe out, right? So I think I'm currently looking at the June 155C, and if we get up to here to this supply and test it, I might roll out to the July 155C, just to take some profits off the table, stay in the trade, or maybe even just roll up to the June 160s, right? So I get in for a little bit cheaper, take some profits off the table, and let it continue. With like MU, it's kind of the same thing, right? So this was the downtrend that had formed, and for a while, like here, this was the second point in the trend for a little bit. It kind of broke out of here. It tried to retest, but then it just couldn't. It broke right through here. So that was like, okay, well, now this is the downtrend that needs to break. Well, we broke through, didn't close over, so that was no good. We broke through, we closed over, it tried to retest and said, no, we're still weak. And so this became the downtrend. And now we have broken over. So I fully expect MU to show signs of a retest. Kind of hope so, just so we can get some cheaper contracts, and then maintain this steeper uptrend. Okay. SPY, kind of the same thing. We've got I don't have the downtrend drawn here. Let's throw it in. Down weekly. All right. So here was the downtrend. It actually broke out here. And I have been trading this. I mean, I have been trading SPY. And in fact, last week was, I jumped in at the end here of this week for a swing in SPX into last week. This was an inside bar week. After a breakout, I saw that the EMAs had starting to churn. It wasn't within this particular strategy yet, but it looked like it was forming. Plus, we had we all knew that Donald Trump was going to go to Switzerland and discuss the China tariffs and try to de-escalate it. So I took that chance based on technicals and the geopolitical aspect of it, and it paid off handsomely, very handsomely. So, um, but this is now we have hit this trigger, right? So now, SPY looks like it's a little bit extended and it looks like it needs a little bit of cool off, which is fine. You can see this uptrend here. It's pulling away from that just a little bit. So I would like to see a lower open or a wick down. I would like to see a retest of some of these key supports here, um, and then kind of and judge it from there, and then get into a vertical spread on this one. QQQ. So this was a weekly channel that it was in for a while, January through March here, and then it broke through, just as everything did during this time, this March April tariff nonsense, and we are back into it, and we are approaching all-time highs, much like SPY, same kind of thing. Now I haven't drawn the trends yet, but it's there. Coin, same thing, right? Same thing, coming down, and we're curling back up. And this is why this strategy does not trigger that often, because often we don't always get these, big pullbacks and then, a ramp up and curl up. Um, it just doesn't happen that often on a weekly basis, at least. You almost have to kind of be in a bear market, and this is kind of getting out of the bear market, right? On the weekly, on the daily, we do get a little bit more regular triggers. We don't need to get into a bear market on the daily. Just need to have a few days of pullback, um, and damn, I gotta get rid of this. I will blur. I will blur that out. sorry, sorry, guys. Nvidia in 118 has had quite the struggle. IoT, same thing, right? A much bigger drawdown here, but here we go. We're popping. We're going up. I like these trends. I like this here. Let's go up weekly. That's good, and we could probably even come in a little bit steeper on this one. Look at this. Yep. No, that's nice. Come in a little bit steeper for a better R&R. It breaks this trend. I'm out. I don't like it. If it keeps going, I'm in. That's that simple. This right here, this is the start of a weekly supply zone, so I do expect some resistance there. But again, I grab a contract, and if we get to that, I'm happy to just kind of roll up on it. Roll up, take a little bit of profits off the table, stay in the trade, and see if we can just continue to ride this trend. Love. This is an airline. Look at this one here. These are actually my monthly lines. So this is Southwest Airlines, and the monthly has really, really just it's taken a beating here. So even on the monthly, we're almost ready to hit a trigger. Although I don't play this one, but look at the last time it triggered. What did it do? Right? It had 3 months of big upside here. So and then this strategy got out because it never really fully hit its profit target. But whatever. If you were in options on this thing, guarantee you you'd have been taking profits on this candle. If not even holding on for 2 more months, but probably would have just happily taken profits on that candle and been a happy camper. So this one here, this is a monthly downtrend. It has not broken out yet. We've got a monthly uptrend here. It's building this triangle. We're getting close, really inside of the apex of this triangle. On the weekly, it has triggered. Has this one triggered before? Oh yeah. We've had, so this one's had 14 trades and 35% win rate. 2165 profit factor. So again, grain of salt, because with options it's going to be way different. It's hugely, massively different. I think with love right now, I'm looking at July 35 Cs for like 96 cents, right? So we're actually, it's almost at the money. It's just outside of the money for 95 cents. And uh, I'm happy to hold on to that. If we do actually, if this is the one that breaks through this trend, and we break through this 200 weekly moving average, which lines up with this downtrend here, we can start seeing some of these resistances getting tested, and that 95 cents, could easily, depending on where it goes, it could easily see 200 or 300% without question, depending on the speed and the distance, of course. So SMH, all right, let's look at SMH. Oh, 4 trades here, all winners so far. So there's no profit factor because it hasn't lost yet. So, um, grain of salt. Options are different. Oh, wow, look at the last time that this one triggered. When was this? 2015, right? But look, it looked the same, exactly the same. We had a nice downtrend for several weeks on this. We curled up, broke through, EMA's crossed, broke through the 50 EMA, and we went, the strategy went long here. Had a couple of weeks of downtime, not the best, but if you get in here at the beginning of this 1 week is all you need. I mean, you could have gotten out, left runners, had this next candle, and said, that's just not working out for me. That's took my position down to red, green to red. So likely this was a very short term swing trade with profit. It wouldn't have gotten out here. You wouldn't have waited this far. That's just how this strategy is coded. That's just something I can't avoid right now. Here again, this one wasn't as pronounced of a downtrend with a crossover, but it did work, and it actually worked out. It wasn't as pronounced though, but any rate, that is just kind of showing similarities here. SMR, same look. It's just the same thing. Now SMR, I was actually in this last week. I took this early. There was some options flow that hit. I grabbed it. I think I got out for like 40%. It was just a good trade. I wasn't comfortable with this rejection of the downtrend, and I was happy with my small win, so I got out. But then towards the end of the week, what happened? It triggered. The EMAs really showed that crossover, and it triggered. So grain of salt on this one. Again, I will want to make sure that it does break this downtrend before I try to get in again, but I am keeping it on watch. VRT, same thing. Look at this downtrend, broke through, creating this uptrend now. EMAs are crossing up. And yeah, we do have some resistances and supply up here, but I'm just looking for this trend to maintain. I think this one could go to all-time highs by the time August rolls around. I think it has the potential. I'm not going to, who knows? It could break this. It could break this uptrend next week. I don't know, but I think this has the potential and possibility. Trigger hit, and I'm going to play it that way. WDC. All right, so this trigger went off as well. Now, this one here had 12 trades. It looks like the past, two of them have been losers. And if you do look again, let's get rid of this. If you look here again, this is that flat EMA. It's just it looks like they just crossed on accident. Like it's not really Oh god, it's building momentum. No, it really doesn't look like it's building momentum. It looks like it's trying. It's just kind of an accidental thing, and you can see this one here. It got in and it tested this downtrend because this was actually formed back here on this candle. So got in right here, it tested it and immediately dropped down. Immediate rejection. No, I would have gotten out there. I wouldn't have waited for the stop loss to hit. I would have just gotten out. But yeah, that's when it doesn't work, right? Same thing here. Got in, it broke, right? So you could have had some small profits on, if you're playing weeklies. I probably wouldn't have, but could have had some small profits. But then yeah, we just rejected it, came back down. Not fun. So here though, you can see now the MACD has dropped, right? So we let bears get in control, get some selling pressure. Looks like selling has been exhausted now. Are stepping up, and now we're building momentum. Now we're looking to ramp this up. So you can't build momentum from a standstill. You need to wind up a little bit, right? You need to get some pullback. Um, you need to be able to swing that back, right? So you've got to get that leg going to build that momentum. That's probably a bad analogy, but at any rate, this looks good, right? We just had earnings on it too. I like this one. This looks good. Uh, I will play this with caution because this downtrend has been rejected twice now, but this looks posed to break through it and hold through it this time. Um, doesn't mean it will, but this is a solid chart, and that is a little steep. If I go to the daily, oh, I already have a line on here on the daily. The daily looks a little better for that trend line, um, but yeah, this thing looks like this is probably the trend line that I will ride. When that breaks, I'm out. And then there's more here. Definitely mentionable. I mean, definitely tradable. Just not as liquid or not kind of my style exactly. But Burlington. I mean, this looks great. Look at this consolidation up here. Perfect test and rejection of this resistance. Finally dropped down. This was just a nice breakdown here. This would have been a great trade. But now we have come through consolidations, building liquidity, and we building this momentum. So we drop down. We're building this momentum now to come back up and push through this zone and break through this resistance. That's what it looks like it's doing, right? It tried it, it tried it, it tried it. It couldn't do it. Didn't have enough buyers. Bears were in control. Bears took it back down, and positions were building up here. That's what this chart is telling me. Uh, positions were being added. Bulls were accumulating, building that momentum, and it looks like it's ready to come back up and attack it again, right? That's usually what happens, and it's the same thing with supports. It does the exact same thing, right? So at some point, this support here, it tried to break down, it couldn't. It launched up, and then buyers got exhausted. It came back down here, and it had to try this support zone again to see what was going to happen. And of course, buyers then said, you know what, this is cheap enough for me. Well, let's go. Um, so anyway, Disney's another one. Disney's been on fire, man. Past couple of weeks, I just couldn't buy this. Like it had already just made a monster move without me, and I just couldn't buy into it. But here we go. It triggered, broke through the 200 weekly EMA here. Um, just a great move. Look at these gaps here on the daily. Just not something I want to play, but it has triggered, and it definitely could see a run here. LRCX, just it has the same look. And look at this. This has been this was a resistance here, broke through, became support, broke through to the downside, became resistance, right? Became resistance again, rejected, okay, coming back up again, right? This rejected hard. It came all the way back down here. Said, okay, it's like a rubber band, right? Like you're pulling this back to slingshot it to try it again. You tried knocking on this wall a few times to try to break through it. Uh, Ultimately did, but just didn't have enough to really stay through it. And so now you're pulling the slingshot back, you load your rock up, and boom, you're launching to try to aim for that wall and try to hit it again. That's what's happening here. We're building momentum. Sound like a broken record. I'm sorry, guys. I just, I like talking about this stuff. So here, PSX, we've got some oil here. And again, it's a nice downtrend. This is the same thing. Don't get these confused. This is the same thing that I just showed you on those other two tickers here, except it's at an angle. This is the resistance, right? It it projected here. It tried it. It tried it. Tried it. Tried it. Tried it. Rejection. Come back down here. Slingshot, right? And trying to hit that wall again. This is just not a straight line. It's a downtrend line. It's the same concept though. This is the resistance. It looks like it's ready to try it again. RSP. This I put on here. I don't trade this. I never do. But this is the SPY equal weight. This is notable. This is another piece of confluence that we are looking to attempt all-time highs on SPY and QQQ here fairly quickly. And I say fairly quickly. I mean within the next 3 to 4 weeks probably. And yeah, it looks great. It's a wonderful thing to see that the equal weight is also forming a very nice uptrend, healthy. So that's why I had that in there. It triggered, and I wanted to show that. True, same. It's just the same concept, right? Same thing. TXN, a little sloppier on this one, but still the same, right? So that's that's always something to um, pay attention to too, right? This is why I do like this strategy because these charts all look the same. It's just kind of doing the same thing over and over again, and that's nice. It just takes all the thought out of it. XLK looks a lot like QQQ, right, with this upward channel breaking back through it, getting in there. Definitely looking at all-time highs here real quick. We're only a few points away. So, all right. So at any rate, sorry I made this a lot longer than I originally intended. I think I just got excited and wanted to talk about it, but please feel free to drop any questions, comments, or concerns about this. Oh, I did want to show you guys my contracts that I'm looking at. Here you go. So these are the contracts that I am currently looking at. I'll leave this here. You can pause the video and look over it yourself. Take your own screenshot if you need to. That's all this is, just a screenshot of the cons. And so the way this works, this is 2025, June 20th, call and 155 strike. Right? That's how all these are. Coin are, these are pretty expensive. So I have the 280 and 300 up here because I'm probably going to look to do a vertical spread. I'm going to buy the 280, sell the 300 for about, what is it, like 580 or so. Preferably cheaper. Like I said, I am wanting some pullbacks for the early next week for some cheaper prices. But Anyway, I am looking to do a vertical spread on coin. This is going to help me psychologically put up with some of the volatility in this security. And plus, it's just going to be cheaper. It's going to be better for my mental health. And here we have SPY. SPY, I'm going to do the same thing. I'm probably I'm currently, this is what I'm looking at, buying the 600, selling the 615 for about the same. It's like 540 or so right there. Uh, and again, that's just another vertical spread, just so I can put up with some volatility. And of course, this one is heavily riding on headline news that could drop at any split second, and just ruin all of these setups. But again, that's why I'm going to get in a spread here for June. Sorry, did I say July? These are for June. And yeah, these are the contracts that I'm currently looking at. Again, I'm not looking at taking every single one of these. I don't even know that I'll take all of these, right? I might only take one or two of them that I like, but I might take one of each as well, and get after it. Just kind of, I'm going to wait and see. This is what I'm watching, and I hope this helped somebody. If it did, please let me know, because that encourages me to continue doing these. Thanks, guys.